Three. Good morning. I am April Chadwick.
And I'm Diane Gertis.
And we are with the Mortgage Advantage TMA Corner. Good morning and happy Friday. How are you today?
I'm all right. I'm all right. There's been good news and not so good news in the mortgage front. So other than that, but otherwise, it's going to be a beautiful day here in Phoenix for once.
For
Still
a
in
minute.
the 60s, but we've had a rather cool winter, but I guess we'll be grateful for it come summer.
That's
and winter's almost over, so there you go.
Yeah, well, in theory.
Yeah, well, we've got our flowers blooming and stuff, and grapefruits and oranges. So, yeah, it's a great time of year.
Great time of year. Spring is about to sprung. So, what is going on in the mortgage? Well, for today, I guess. What is going on in the mortgage world?
The good news is it was rumored, but came completely unexpected that the monthly mortgage insurance premium dropped significantly. For instance, on one of my clients who went under contract, and this is for FHA only, the monthly mortgage insurance premium is going to save her $130 a month in mortgage insurance. Her loan amount is right at $520,000.
Oh, great.
So it's a significant drop. It was 0.85% of the loan amount divided by 12, and it dropped down to 0.55. And if you put more than 5% down, then it drops it down to 0.50. So it was a significant savings. And they can do more. FHA has kind of their cushion per se has to be at 2%, and they're almost at 12.
Yeah, so their nest egg is very big.
Yeah, so they could do significantly more to help first-time home buyers. And boy, do especially in the Arizona. I think most places in the United States, everybody can use help. But with the housing prices as high as they are, any buyer will be grateful to be able to have any type of savings.
Right.
Now, on another front, Fannie and Freddie, who are evil, they are evil. Here we are in this historic time where housing prices are so high and people are struggling not only to trying to buy a house, but to pay rent. And so people think, well, look, instead of me paying $2,500 a month for rent, I'll go buy a house. But as Fannie and Freddie decide to do, they're going to change the guidelines up until for instance, for people with good credit reserves, you could probably go up to 50% of your monthly income for your total house payment and consumer debt. So in other words, if you made $5,000 a month and $2,500 would be 50%. So you could go up to that. Fannie, Freddie, this is conventional. They're going to toughen it up for buyers. They're going to make the ratios more stringent and harder for approval. For the higher, anything over 41% now, you've got to be very careful with to see if you can get an approval. Both on Fannie and Freddie, which makes no sense to me whatsoever in these times when you should be helping the buyers. At least you're thinking, oh, poor Fannie, poor Freddie. They made each of them made like $12 billion the last quarter. Billion, not million. They're making so much money. Why can't they? I'm not sure why. They certainly aren't helping the buyers by lowering the interest rates. If you're reading everything that came out this week, it's all like, oh my God, we're going to be at 7% again. Yeah, the interest rates have gone back up. We had a little sweet spot where we had them a little bit lower, but now they're going back up. And it depends on which lender you're using also, and if you're paying points, all that's going to look like. But they're not helping with the rates. Now they're not going to help with the underwriting. So what is their purpose? Why isn't someone stepping in and say, wait a minute, wait a minute, wait a minute. Why don't y'all use some of that billions of dollars and buy down the interest rates so the interest rates are more affordable? Wait a minute, wait a minute. Why are we now all of a sudden making all these guidelines so much stricter? There's not been a lot of foreclosures. Do they see something coming down the road that we don't? Anyway, I'm done now.
There's
I
a
could
lot.
rant about it.
Well, and as we've discussed, and right now, the biggest problem is affordability. Affordability. And so, and then if it's affordability is the biggest problem, and then they're just making that bit of affordability shrink more and more and more with, like you were saying, debt to income and then the interest rates.
Yeah.
So, but you know, yes, I don't ever in my entire life think I've ever heard someone say, I feel so sorry for Fannie and Freddie, or I feel so sorry for the bank.
All the money that they're making. I don't, no one can seem to make it clear of why they're doing this. Now, I mean,
Right.
if you've make plenty of money and don't have a lot of debt, and you're not going to have a problem. But that's not the kind of loans that we're getting, not right now.
Right.
I talked to an underwriter at one of our main banks. I think you were there when she was on the phone with me, and she was talking about how difficult the loans were right now.
Yeah.
And she said it's the people that are trying to buy, they're trying to make it work for the buyers, because it is, the affordability is ridiculous.
Right. And this, we're not talking about people like, people are like, oh, I'm not sure if I can afford a home. These are, you know, I'm not trying to say this the right way. I mean, it's not even first time home buyers. These are people just trying to buy a $530,000 home, which is.
Yeah. And their payments are going to be like $3,700 a month.
Right. And to find a decent house in Arizona or in the Southeast Valley in certain places, 500,000 to 525 is not extravagant by any means.
Yeah.
And so, yeah, it's a definitely different time. And for all of those that are in this industry, I think that we all saw I mean, wasn't it like just last month, we're like, woohoo, hey, we're getting busy again. Like things are picking up, and then it's like, oh, here comes some more news down the pipe. So we shall see. Yeah,
the interest rates, went up, and well, they went back up, or started increasing again. But it's just, and what's going to happen is that I think what we'll see is that a lot of buyers who we would put on conventional loans, we may have to flip them to FHA, because if they're going to be this ridiculous about it, then why not? I mean, they've dropped down the mortgage insurance premium, and it may make more sense to do a lot of loans FHA. Unfortunately, FHA's loan limits are like 530, 150 in Arizona, or Maricopa County, should I say, Maricopa County. So we may end up doing more FHA loans just because. Well, the other thing is that FHAs allow higher ratios. You can go up to 55%. Or 55.9, depending. And so there's all of these other factors, but none of it makes sense.
Well, that's what we can say for our theme for today. It's just none of it makes sense. We're trying to make sense of it, but just got to keep out there and keep moving.
And I want to talk about appraisals real quick. I know just to get it all in. I talked to one of my agents that works for 72 Sold, and she said that they had a Zoom meeting about the number of appraisals that are coming in low, and not just a little, but a lot. And now she said that they had been told that Fannie and Freddie have been told to bring appraisals in very conservative. That is not the case. There's no memo out there on that. The appraisal is the appraisal.
Like Fannie Mae or Freddie Mac talking to appraisers and telling them to be
correct. That's not the case. They have appraisals are all done a very strategic way. I mean, strategic, rigid. They have a format that they use for appraisals, and of course, a lot of appraisals are the opinion of the appraiser.
Right.
So you can get an appraisal can be a big swath of depending on what one appraiser thinks from another. But anyway, we're now seeing the appraisals. We have not seen those, but according to the agent, they are seeing a lot of appraisals that are coming in lower down.
And that'd be
Just
interesting. Good thing to reach out. So like kind of word on the street is we're starting to see appraisals go down, you know. So it'd be interesting. And that's definitely something I'll reach out to agents.
And if that happens, that means our housing prices are going to be coming down, because if the appraisals can't match what they're asking. But again, this is from, I'm not sure, we won't know for sure how valid any of this is for a few more months.
Correct.
Oh, there's Tony.
You know, like we made it so close. We're almost done. I'm like, we're good. But no, he decided to start barking.
So anyway, there's a lot going on in our market. We've got the more good news. The FHA monthly mortgage insurance premium was decreased. Yep. Not so good news is Fannie and Freddie being evil. And then of course, appraisals is the jury's still out to see what that's going to look like in the next couple of months. So
stay tuned, everybody.
Stay tuned.
Every week is a different adventure, and there's a lot to follow up, and things could change. I mean, and I think one thing we have noticed with Fannie, Freddie, the banks, they move at a glacier pace. You know, like we've been having affordability for a while, so who knows how long it'll take before they do other changes, I guess, right?
I don't know who makes those changes. Pretty sure, as I've said, the people that run Fannie, Freddie, and the Consumer Financial Protection Bureau, none of them have ever financed a home before.
Yeah, I don't think so.
No, they all probably pay cash for their homes or whatever.
Or don't have any friends in the business either.
They don't. There's just to have some of this, make us do some of the stuff and some of the forms that none of it. People say, well, this doesn't make any sense. Okay. I work in mortgages, so it's not supposed to make sense. We just have to, I'll explain it the best I can, way I think they maybe thought of it, but yeah.
Well, like you say, you speak Lonese.
Yeah, I try not to, but sometimes you have to.
Well, thank you for all the updates, and for everyone out there, like if you do have things are changing, I mean, it's been kind of a wild ride, and everything, it's always to adjust as to what's going on, but it doesn't seem like it's really this time going with the market. It's kind of going against it. But for anyone that has questions, obviously Diane is our guru of loans, lending, mortgage, and everything in the market. So if you need her for anything, she loves answering her phone. You love it in text.
I do. Call me anytime. And my clients too, and I don't mind at all. Call me.
She doesn't, and she's fun to talk to. If you do call, and I know some of you do, like, you know that you guys, it's a good convo. So, and Diane's number is 480-235-5667. And if you want to reach me, I'm April, and you can reach me at 602-740-5319. And for all of you in Phoenix, enjoy a sunny maybe weekend, as long as we don't have that wind.
Yeah, that wind was horrible.
And have a great weekend, Mom.
You too.
All right, take care.